All right, guys, it's 8 now. So we'll kickstart this workshop. So this workshop is actually brought to you by Ying. We have joined by Ying and I. So two of us came together and designed this workshop lah, to basically um, teach you all about technical analysis and how we use them on our daily trades. So this will be a 4-part series. As you can see the date right there, it's 8, 15, 22, and 29. Yeah, so there's something new. Usually you'll just see us once a month, but now we actually went to push it a bit slightly more lah. So you see it's a weekly instead of just once a month. So we want to be as engaging as possible. So if you guys got questions, likewise, under the Q&A, just shoot us your question. We will answer them at the end of this session lah. So nevertheless, let us kickstart. So I'll just show you guys the table of content for the week 1, week 2, and week 3, week 4. So there will be 4 parts. Today is just the introduction to the basics of technical analysis. Then subsequently, we talk about indicators such as EMA, and then we go slightly deeper into advanced indicator. And then subsequently, the last week, which is quite important, the last week is, after knowing all your TA, how you're gonna apply them, how you're gonna get rid of your feelings is what is actually most important. But subsequently, we will just want to go on to touch about the technical analysis first. So for today, we have speaker introduction, which is slightly after this slide. What is TA, the different type of charts. So there are some things that you guys probably would have already known. Then we're just, because these are fundamental, so we just want to cover them as smoothly as possible. And then there are some important factors as well. I think one of the important topics is the support resistance, which I am particularly find it most important for fundamental wise. Nevertheless, Ying has things to tell you also. But then we will start after our speaker introduction. So, okay, moving on. I'm Xiong. I'm more towards the I've been trading the US market and Singapore, but mostly I'm doing options trading. Buy stock, sell stock. So why options is because you can always play it up and down. You can buy call, buy put. You can buy, you can suit it to the direction of the market. It doesn't have to. You don't have to wait for the price to come down and then you start buying. So that's why I like options. And options basically gives the trader more options lah. So basically you can cater, you can buy, sell, you can do anything you want. You can take profit or buy in anything at any time, regardless of the market. So that's why options. That's why I'm so interested in options. I've been doing it for almost for US market about 5 years now. Then options wise about 2 to 3 years. So that's still not so bad lah. I'm still, I wouldn't say I'm very long. I'm not like a very super experienced, but I think in terms of fundamental wise, I think it is I'm okay to actually provide you with the technical analysis fundamentals, and then something for you all to take away at least for this session. So I shall not stop Ying from introducing himself. So hand over to Ying.
Hi, very good evening, everyone. I'm Ying here. Okay. I see quite a few familiar names that have joined us today. Okay, so I'm Ying here. I think this is the first time I'm doing an introduction. Okay, so I have been trading using technical analysis for, I think this year will be my 10th year. Okay, I started with equities, then I slowly moved to focus more on forex and commodities because I'm just making use of the hours, like working hours, right? Basically other asset class running 24/5 equities, I'm limited to the time itself. Okay, then but nonetheless, I've been using a lot. I mean, I used to do a lot more on swing trading. Okay, only in recent, I think 2 to 3 years, then I started doing intraday. Okay, previously was trading with prop firms for forex, then shared with others on technical analysis, like what to take note of and how to make it simple. Okay, because TA itself, um, it doesn't have to be complicated lah. Okay, so hopefully in this workshop itself, this 4 weeks webinar, we will be able to share with you as much as we can. Then if you have any questions like what Xiong mentioned, just put it in the Q&A. We will answer it at the end of this webinar. Okay, so I will just start the content first. Okay, what is technical analysis? Okay, everyone has very different opinions. Okay, no, not opinions, like understanding of technical analysis. Okay, but the simplest way to explain it, right, is basically you are reading the chart to find opportunities, to identify trading opportunities that basically you can try making money out of it lah. Okay, so but TA itself, like I explained many times before, the TA or your strategy that you use, right, the methodology is not fixed to one asset class only. Like you don't have a single strategy that, oh, this is only for equities, this strategy is for FX, you know, that kind of thing. So if you understand TA clearly, right, actually technical analysis, as long as your strategy, you understand it well, I mean, first off, you need to make sure that it's a high probability win rate that strategy that you have. Then after that, your TA is basically for all asset classes. Okay, then like Xiao mentioned, I mean, now we have options as well. Make use of the bearish market, finding opportunities to short the market as well. Because for equities, if you're just solely on equities, you are basically just longing only. Okay, so you're missing out on the bear market when price starts to retrace or doing a correction. Okay, so in short, I think from the slide itself, TA, basically we observe from the chart, okay, based on history, okay, then how the price is moving at the current time, basically, right? So another interesting quote that I saw like recently, okay, so basically they were saying, being good at analysis, right, like if you can be a very good technical analyst, okay, but it's just basically you understand, you basically master observation, master how to observe, okay, because basically if you are good at TA, it doesn't mean you will be able to trade properly, okay, because to be a successful trader, right, there's a lot more components in it, like which is why during the 4th week, right, we are going to talk about trading psychology and also risk management. Okay, because to me, I feel that that's the hardest to really understand and the hardest to follow, but that's the key to really become a profitable trader, basically, right? Okay, so TA, this is TA. Okay, then now, okay, all these are basics. I think we are just going to go through, okay, because this whole workshop, we want to go through there's a structure that we want to go through. Okay, we go from basics, slowly we advance to more complicated ideas or concepts. Okay, so for this first week of webinars, right, we are just going to go through all the basics. But even with that being said, right, the basics that we are going to cover later on is going to be is basically like your fundamentals, okay, moving forward to more complicated TA concepts. Okay, because like for example, later we will talk about trend, talk about market cycles. All these are just is going to be your bread and butter, basically. It's just that you are using indicators to find confluence, okay, to make your trading probability higher. Okay, so in this chart, okay, type of charts, we have candlesticks, line, and bar. Okay, I mean there's many others, there's point and figures, you know, there's a lot of others, but these are more commonly known. Okay, so line chart, if you can see on your bottom left of the screen, is basically lines. Okay, so the data itself, they make use of the closed data. Okay, they are taking at the market close only. Okay, so you don't have any other details like whether at what price they open, what's the high of the day, what's the low of the day. Is basically plotting the data based on market close. Okay, so it's very simple to look at it. You probably be able to tell your trend very easily from a line chart. I'm not saying that other charts cannot, okay, but line chart is just straightforward. It's just lines, basically. Okay, then the next one, bar chart. Okay, I know of traders that use bar chart as well. Okay, basically it's like a candlestick, but how it illustrates the data itself is slightly different. Okay, so if you can see, the left side, okay, your horizontal line on the left side, right, is basically the open. Then the shadow itself is basically low or high. Okay, then once you see a horizontal on the right, basically that's the close. Okay, why personally I don't use bar chart? Okay, I used to use it, but slowly over time I realized actually if you use candlesticks itself, right, you basically upfront you would be able to tell the data very, I mean, it's just there already, it's just there, okay? Because for this, you still need to figure out where's the left side, where's the right side, okay? I mean, it's quite easy because it's red and green, right? But yeah, I mean, the next one, candlesticks, yeah, this one will be way easier. We are just using the same chart, okay? It's all on NASDAQ 100, like for example, for illustration, okay? So with candlesticks, you can tell how the candle actually moves throughout the day itself, okay? Provided that you're looking at daily chart, okay? This is a D1 chart. So you know how the price action is moving, market opening, where they open at, whether it's a gap up, gap down, anything lah, okay? So with candlesticks itself, you will be able to tell the information very, I mean, basically it's readily available, okay? It's just there already. It's easier to read based off the chart itself, okay? Then you hang on, I think Xiong has something to share as well, okay? I pass it on to him first.
Yeah, hey, thanks, Ying. Yeah, so I thought I should touch on this. Like, you guys might be wondering why, wow, how you guys have been in the market for how long? Why we still look at charts, right, for fundamental analysis? So I just want to touch on something is that chart, the type of chart you use is very, very important. Why so? You might not feel like it plays a part, but actually it does psychologically. So let us take a look at line chart. Yeah. So line chart, very clear, very simple. You can just look at overview, no hard feelings, you won't know the high low, don't know anything, right? But it gives you the overview. So yeah, for maybe just this NASDAQ alone, you can see it's an uptrend, and then subsequently it's flat throughout. So not so much about how high it went, how low it went, close rate, close rim. So not much because you don't see the colors, you just see one whole line. And then when you enter the trade, usually the line chart, you won't have too much, you won't be so scared, basically, because it's only just showing you simple data, which is the closing data. So once again, the chart you use is gonna be very, very important. Maybe we touch about bar chart. So bar chart, I personally don't really use it, but I think I've seen traders using it because it might be more simple for them. But as you see, we move on to bar chart and candlestick chart. You start seeing the colors compared to line chart, and then that's where the psychology comes in. But we are gonna talk about psychology in week 4 But now I'm just we are touching this chart thing because I'm telling you the chart you use is gonna be very important. It's gonna play a lot on your feelings, how you feel at that moment. So why so red, green? It's all psychology. So when you see the red, you panic, right? And you're like, wow, I hold stocks. Should I sell? Should I sell? So that's when color comes into play. But when you look at my chart, it's like, wow, everything blue. Nothing, right? Nothing to see. Everything closing. Yeah, then see, I don't even need to worry like how low it will go. I won't have like rather than I see wow 5 candlestick red, like how should I do it? So all this plays a lot on your psychology. So that's why we are going through charts and why the selection of your chart is very, very important. So usually people I think the more experienced one is gonna use bar or candlestick. But if you want to use line chart, it's advisable to start with a line chart. You won't be, I would say you won't have so much like you won't have so much psychological stress like look at line chart. And then it gives you a simple overview. So if you are doing long-term wise, it's good lah. So but if for those swing traders or maybe intraday traders, you are gonna be looking at candlestick. There's more movement, you want to see the high low, your exit point, and then it gives you this support resistance line much more clearer. So yeah, that's what I want to talk about charts to you guys and why you guys must be wondering why we are talking charts now. Okay, so yeah, back to you, Ying.
Okay, yes, thank you, Xiong. Okay, so after charts, right? Basically, I mean, like Xiong shared, right? Okay, the chart really plays a part. Okay, so but that's really the first thing you will see lah. I mean, regardless you open trading view, you know TA or don't know TA, right? The chart is just there lah. Okay, so it is you just need to understand like at least the candlestick itself, what are they trying to say? Okay, so I just show you again. Okay, so you basically, like you see green candle, okay, the body itself, the bottom one will be open, the top one will be closed. Anything is a line, right? Like a wick, right? Basically, that's a shadow, which is a high or low. Okay, that's it. But moving forward, right, then we will share more on how you can basically you can take note of all these candlesticks at levels that will make a difference for you. Okay, so stages of market cycles. Okay, this one I think many of you, those that have read like all the like investing books, right, or like trading books, all these, they always tell you trend is your friend. Okay, always ride the trend, don't fight the trend. Okay, why I say that? Okay, the simpler definition of this market cycle, right, is basically is just to talk about trend. How do you identify trends? Okay, so a trend is basically an overall direction of a market or an asset's price. In technical analysis, trends are identified by trend line or price action. Full stop. Okay, then after that, the subsequent one is I have been mentioning many times. Okay, how you identify an uptrend? You have higher high, higher lows, right? Then you have this zigzag going higher. Okay, so that's your trend. Basically, your trend is in play lah. Okay, then for the bearish movement, it will be lower low, lower high, lower low, lower high. Also zigzag down. Okay, because also one thing to take note is, I mean, not saying that it don't happen, but in cases where you have market data coming out, earnings release and all this, right? Like you have a catalyst in the market, right? You will see price moving in one straight line lah. Okay, it happens to go. That's the impulse move. Okay, but generally you will see more of the zigzag movement. Okay, then that's how the trend will be formed. Okay, then trend line, side note, trend line is basically diagonal support and resistance. Okay, later we will show you why. Okay, then the basic one, these four stages okay, it's basically written there okay, accumulation, markup, distribution, markdown. Okay, this chart itself, this illustration, I think it shows very clearly what it's trying to say. Okay, so this is like what you will read off the books okay, like you go find books, right? Usually they will just share this. Okay, but what I want to add on in this webinar is I give you my own understanding of it. Okay, you watch my webinar enough, you will know that I always classify it in 3 stages only. Okay, because basically in the accumulation or distribution, right? Say real okay, you see accumulation like all this range, right? Basically, you won't know whether they are going up or down yet. Okay, but all this will come when you start understanding your price action or using indicators. You find convergence or divergence, then you know that okay, the price might be turning already. Okay, but otherwise, generally, you don't need to be so confused. Basically, you just need to know that any sideways movement is a range. Anything going up, basically rally or coming down is drop lor. Okay, so once you understand that market moves in these cycles, right, then you understand like okay, where will you be more profitable? Okay, because say real like a market will only trend, right, probably like 30-40% of the time. Okay, so the remaining 60-70% is basically they are in a sideways movement. But not saying that sideways you cannot pay. Okay, it will be coming down to your time horizon, how long are you going to hold, your risk management. Okay, all these week 4 we will go through in depth. Okay, but for now, the bulk of making money, right, is basically riding the trend. Identify the trend early so that you know how you can capitalize on the trend movement itself. Okay, so I think now it's just illustration. Now you just see is I draw like rally, then one range, one drop. Okay, but later at the end of this webinar, before we close it off, we will pull out some of the charts, right, live charts. Then we will go through show you live examples basically, right? Then but for now it's just to share with you in theory, okay, in theory, what you need to understand first. Okay, all these concepts I think is what really will make a difference in how you're going to trade moving forward. Okay, then next one, support and resistance. Okay, why this one is very important. You read everywhere same thing. This one you just go and find what trade TA lah. Basically, you just find technical analysis. You confirm come out see this support and resistance. Okay, it's so simple to understand, right? But it's so difficult to master. Okay, that one I really have to stress about it because a lot of people will say, like, I mean, those that watch our webinar, right? I forever just do drawing lines and zones. Okay, I don't put any okay, sorry, not funny things. Okay, it's just that it don't work for me after so many years. Okay, so I just tweak my stuff. I just go back to naked price action. I just draw levels. I understand the levels. I know what I want to do with it. Okay, but I'm not saying that indicators don't work. Okay, that's why we will still want to share with you on indicators moving forward. Okay, but support and resistance, this is like, it's basically like bread and butter lah. Even if you use indicators, right, say real, you will still need to go and figure out your support and resistance. Okay, because with that you find your range. You find your range, then you will know whether with your indicators are they in confluence. Okay, otherwise indicators alone is lagging now. Okay, it's lagging indicators. The data printed, then you know whether it's in your direction or not. Okay, so by then you might be missing out a lot of the moves already. Okay, so support and resistance, in short, like the basic is, okay, you have 2 points on the chart. Okay, then they keep getting rejected. Like you have a single point, subsequent point get rejected, subsequent points get rejected, right? Then they form this resistance, which is illustrated on this diagram here also lah. Not diagram, this chart lah, basically, right? So you have resistance, you have support. So basically it's just the ceiling or the floor. Okay, price refuses to go up at this point, price refuses to go down at this point. Okay, so with this you start having this accumulation or distribution or range. Okay, so support and resistance is very really, I mean I cannot stress it now lah. Okay, it's really very important to understand Understanding is one thing lah. Okay, you understand already, then you need to go and know how to draw it properly. Okay, because you look at the chart, you have so many fake outs, you have so many funny movement in the candlesticks itself, you have so many levels that are side by side, right? Like the movement itself is not always just nice, give you like equal closing. Okay, if equal, then very easy to draw. But you don't have that in the market. Okay, maybe sometimes you might. Okay, but most of the time you don't. Okay, so you must really understand how can you make use of these levels. Okay, I don't want to call it support or resistance. I just call it key levels. Okay, it's basically levels where price refuses to go up or go down at that point. Okay, so when price starts to revisit this level, we would probably, I mean, there's only 2 reactions. I always say already. Okay, is you buy or you sell. Okay, so how you know whether to buy or sell, right? Then later we will share also. Okay, so this is just the basics of support and resistance. Xiao, anything to share on this as well?
Yeah, I thought yeah, this is like what Ying said. When you say important, it's really important. So for TA, right, this is the bread and butter. Okay, we want to emphasize this. Support and resistance is always the first thing we look at. You know, if it's like if the book, you go and read up some book, and they don't have this chapter, I think you might want to reconsider lah. But yes, this minor resistance support is what we want to stress to you. Okay, so if you guys got any question on these, please ask us. But then you know, if you look at charts, right, you will see all these patterns coming out, especially the resistance and support levels start showing when you look more into charts. So if you take a look at a few counters, maybe maybe later, such as Adobe or other counters, you'll see it coming back to the same, close to the same support level. And then it will still go up or go down if it meets the same resistance level. So maybe at the end of the session, close to that, we will show you some charts which really emphasize on this support and resistance level. So yeah, okay. So let us move on to the sorry.
Okay, since we are still on this support and resistance, I wanted to leave the Q&A to the end, but just nice. Okay, someone asked, support and resistance equals supply and demand. Okay, simple answer is no. Okay, supply creates the resistance, demand creates the support. Okay, slightly, I mean now, okay, you might not be able to understand what I'm trying to say. Okay, because end of the day, right, the supply will become the resistance. Okay, because eventually you will just keep getting rejected, the demand will become the support. Okay, but the supply and demand itself can create support and resistance. Okay, support and resistance cannot be the supply and demand. Okay, because over time, okay, I know the understanding that people say, okay, the more touches you have, the stronger it gets because it just keep getting rejected. Okay, but I mean, okay lah, I mean I haven't been trading many years. Okay, it's just that many years, but over time you will realize, slowly realize, right? If the thing cannot break, right, means everything we see, right, will just forever be in a range already. Because it will just keep getting rejected and getting even stronger, right? But in short, just what I want to share on this, right? I think moving forward, like the next few webinars, I can talk more on this, or later when we move into the charts itself, I can show you more examples. Okay, but in short, if a support and resistance keep getting tapped into it, okay, basically keep getting eaten up, okay. Keep getting eaten up means your supply is going to get weaker. Okay, it's not going to get stronger because supply, let's say I just give you an example, supply you have 10,000 supply. Okay, that one number to be 100, easier to count. Okay, 100, your supply is 100. First time come in 20, second 20, 20, 20. Okay, by the sixth time, right, you don't have that 20 already. Yes, you might have new one coming in, but because the level just keep getting tapped into the supply, also means that there's a lot of people buying back into it. They are not afraid to buy back into the supply, right? I will illustrate again later. Okay, I think it's not that easy to visualize. Okay, but you just need to understand that supply and demand will create support and resistance. Okay, but not vice versa. Okay, so thanks for the question. I think subsequent questions we will look at it at the end of the Q&A. Okay, okay, then we will move to the next slide. Okay.
Okay, so I'll take over this pattern recognition. Okay, so yeah, we're going to go through some very dry period, It's about patterns and how you see pattern. So generally, say truth spot pattern. Who don't know how to spot? You go and look at one chart right now. You probably would know. Wow, this one head and shoulder. What is this? But then theory once again, once you apply it on the real trading chart, how to spot. So I mean can spot, but very difficult So I think Ying and I will want to show you more on this pattern. We are touching this because it's actually part of TA. And then if you go and go through all the TA knowledge, right, they will always tell you got this pattern, that pattern, a lot of pattern. I think got 100 over patterns at this point, right? So we're just gonna touch through some to show you guys some of these maybe patterns are really there. It's just that when you are really trading in the market, it's not so easy to actually spot because you might think it's a bearish flag, but anytime a news breakout, wow, change. So we're just gonna touch on this bearish flag. So usually flags are very immediate it is very small, and then usually they pass very fast So maybe later we'll show you some flags on the chart itself, but like what it's displayed on the PowerPoint here, bullish flag basically bullish bearish flag is bearish. But if you look at the real any charts, it's usually very immediate, very fast for flags itself. So and then I mean that there's still a lot of different patterns like triangle and stuff, but we are gonna just touch on a few So I'm not too sure if Ying got anything to share with you guys on flag. Maybe Ying
Yeah, okay, I take over from Xiong for a bit. Okay, so Xiong is right. I mean, there's a lot of patterns on the chart. Okay, so many. I mean, there's different terms like basically like flag, right? This flag itself, you can call it symmetrical triangle You can call it ascending triangle, descending triangle. There's a lot of terms to it. Okay, but also boils down. I mean, all these, right? If you just think of it very simply, right? If you just look at this movement itself, the flag area, right? It's basically a range level. Okay, so what they did was basically for bullish flag in this example is a range rally, right? So I think the more important thing is yes, we can identify, we will recognize patterns where we can make use of, okay, trying to get the trading opportunity of gaining more like higher probability trade, okay. But end of the day, right, basically all these patterns are just, how would I say it, it's just a more complicated definition, right, of back to the market cycles itself. Okay, because like I say, they always run in a certain manner. Okay, it's just that you potentially can use the pattern to see if you can identify early the trend that is going to start running. Okay, it's not that every time you see is 100% will go that way on. It's not like what you see bullish flag confirm go high. It's not, it doesn't work that way. Okay, because in the market, TA itself, TA is pricing in a lot of market sentiments. It's just how market view this current, maybe for example like Tesla, right? Past 2 weeks was coming down, and then after that, this week was recovering quite alright, right? TA, the chart itself, the price itself is basically the market sentiments. They are trying to, they are not, okay, sorry, they are not trying to, it's basically the market sentiments, how the market as a whole view Tesla as a company. Okay, it can be at the current point how they think, it can be thinking of it 10 or 20 years later, we won't know. Okay, but all this will be reflected in the price action itself, where with TA, right, with proper TA, you will be able to make use of that and be able to catch the early run. Okay, because like end of the day, say real lah. I mean, okay lah, we might have some BBs over here, all the big boys, okay, but I myself, I'm a retailer. Okay, I know that I'm a retailer. I'm just a plankton in the ocean. Okay, I see the trend. Best is I go and ride the trend and follow the big boys. Okay, I don't want to fight it lah, because basically maybe I can make that few bucks, or maybe I try 10 times, I can hit maybe what 4 or 5 times. But the thing is, the probability is not there for you to win it. Okay, always ride with the trend if possible. Okay, so how people actually make most of the money is basically riding the trend. Okay, early identification of the trend, then holding it out. But holding it out, that one is trading psychology already lah. Okay, that one, yeah, more in depth will be, I mean, more in depth explanation will be coming up. Okay, then with that, we also will share our experiences on trading itself. Okay, so I go back to this candlestick pattern recognition first. Okay, I'm not saying that it's not going to work. Okay, say real is quite simple to spot one. Okay, it's very obvious one. It's very obvious, but it's just whether how are you going to make use of it. I think we will explain more in depth. Okay, so I'll move forward the chart first. Okay, you see this pennant. Okay, it's basically a symmetrical triangle or ascending triangle. Okay, it's basically they are moving out. Previous move, rally came out, price starts to consolidate. Okay, consolidate. Okay, basically moving tighter, contracting. Okay, before the continuation of the burst. Okay, without this formation, right? Without this pattern, that I mean, let's say you see this thing, but you don't know that this is a pattern, right? Basically, you still can make use of it, right? Okay, because you know that, like for example, this left side picture, okay, this bullish pattern, you have a rally coming in. Okay, you know that price starts to contract towards a singular point. Okay, you know that price already went higher already. Okay, so anytime when they start to break your higher high, right, you know that you have a higher low, you have a higher high. What it means, as long as they reject, you can hold that higher low, you will continue this higher high. Okay, so this is if I bring it all back to the market cycles. Okay, but otherwise, if you want to just know pattern recognition, you can just spot this and try to trade it lah. Okay, but I wouldn't advise that. I mean, seriously, I wouldn't advise like you just look at this, then you just say, oh yeah, this is a bullish pattern, I go. Okay, I'll pass it to Xiao if you got something to add on. Thank you.
And then I ask you guys, you look at pattern now, then you look at flag just now. No difference or not? Huh? You compare the two. You compare the two patterns. No difference or not? You all understand? You all see the difference or not? I tell you, in the live chart, you all can tell which one is flag, which one is pattern or not. Say real lah, like I probably very difficult lah. But then I'm just putting it out here lah. Bullish flag, then after that we got bullish pattern. If you all can identify, wow, very good, very good. But if you guys, I mean, of course there are traders who trade on patterns. Kudos to them. But then what are the odds lah? What are the probability if we are talking about the market? What are the probability that you continue, once this pattern comes out, I'm like, wow, 100% bullish, confirm bullish. But you must know 100 plus patterns, which pattern? Pattern, confirm pattern, or is it the flag? So yeah, you get where we're coming across. But then once again, pattern is there. It's been proven. It's been in TA for many over years. So we're just going through. All right, back to you, Ying.
Yeah, like Xiong said, okay, it's not that we are saying that it don't work, it really will work. Yes, it's working, but it's just that from this workshop, right, we hope, I mean, there's a lot more experienced trader than me, okay, for sure. But I just hope to share with you like what really okay lah. I mean, it's also back to the trade-off, right? It's whether you want to be right on TA or whether you want to make money. Okay, it's always this trade-off. Yeah. So I think end of the day we are in the market for the excitement for sure. Okay, a bit of cheap thrill. Okay, then but money is always the byproduct. Okay, if you can make, then yes, it's like a bonus, ma. If cannot, then wow, why do you want to throw your money into the market, right? So through this workshop, I hope we can at least simplify how you look at charts. Okay, because it really don't need. I mean, TA itself don't need to be so complicated. Okay, yes, some people will make it happen, make it work. Okay, like Ichimoku, what you got harmonics, you got all these butterfly cow don't know what lah. There's a lot of patterns Okay, but I just truthfully tell you, I used to look at it, I used to try to use it. Okay, but end of the day, I just throw all of this away lah. Okay, so because slowly I hope like once you understand like market cycles and the stages of the market, right? End of the day, they are just going to move the same way. You just need to identify where they are going to start moving. Yes, as early as possible lah. I mean, even if you are late, as long as you have the momentum to break out of it, right, then the price will still continue to go. Okay, it's just early or late lah. Okay, but with that being said, I still want to go through this pattern recognition. Okay, because the patterns, I mean, you identify already, maybe it gives you more assurance, or maybe like this confluence that okay, now I know that there's this pattern. Like for example, I go to the next slide first. For example, head and shoulder, right? You know that you looking for a short, you don't know where to short, you know that it's a range, rally already range, price start to break lower, where to short. Okay, then maybe you use this pattern as a confluence that okay, as long as they don't start to break higher than my right shoulder. Okay, for example, like the left side, the photo you see on the left, right? As long as they don't break your right shoulder, basically you have a lower low with a lower low with a lower high, right? As long as they don't break your right shoulder. Because once they break your right shoulder, you have this transition of the market structure again from a lower high to a lower low back to a higher high. Okay, for at least this momentum itself lah. So it probably can act like a confluence. Okay, but I wouldn't say that you can just look at the pattern and just trade off the pattern itself. Okay. Yeah. Wait, I pass to Xiong.
Yeah, so I think talking about head and shoulders, I think some terminology like flags, pennant, and head and shoulders. I think head and shoulders will be more slightly more important. Not because it looks like a head and shoulder, but generally you will hear a lot of traders talking about this head and shoulder inverse head and shoulder. So this terminology is quite important So therefore we are putting it out here. But if you realize that, you can take a look at the chart itself, you realize something. You see the neckline, one straight line, it boils down to something that we just went past on it. It boils down to your support resistance, different levels. So at the end of the day, it's all these levels that creates the patterns and shape. And that's why me and Ying emphasize so much on the support resistance portion. Then we are trying to, I'm not too sure if you guys need more examples for support and resistance. Because for our this TA, right, it's very customizable. We are trying to customize it to you guys. So if you guys got any questions, moving forward, we are trying to provide you with all these resources that we have been through. So back to this pattern recognition. Once again, got question, just ask. Don't need to reserve yourself. So once again, back to the pattern recognition, head and shoulder. If you look back at their backbone, it's probably what you're looking at is the support and resistance level. So you see the shoulders, yeah, the resistance is there. See the neckline, the support is there, right? But then why we are throwing out the terminology is because you will actually hear a lot of traders talking about this, and it is usually very important to know that there is this pattern and what they're looking out for. But then I mean, there are traders who trade on these, especially on head and shoulders. It's quite a popular pattern. And then moving forward, we still got a few more patterns that is very, very popular. But in terms of terminology wise, I want you guys to know them. And then if you look at the patterns moving forward, it all boils down to the support and resistance. Sorry, support and resistance once again. So yeah, I'll hand it over to Ying.
Okay, yeah, like Xiong said, okay, I think later when we look into live charts, I think look at live chart more exciting lah. Okay, we can talk about TA like more in depth. Okay, because for now I'm running through the slides. Okay, I just want to show you what I mean. There's a lot of other patterns. Okay, after that, after this, I think we have like what double top, triple top, double bottom, triple bottom. But it's not limited to that only. We still got cup and handle. We got I don't know lah. I mean, I don't look at patterns anymore lah. Okay, the other one that we don't put in is cup and handle lah. Okay, because slowly over time over the years, right, I also realized what's the probability of this pattern appearing? How often does it appear? Okay, because if you are going to slowly just spot on, let's say head and shoulder, right? Okay, if it's there, then it's good lah. I mean, you maybe can try to get something. But what's the probability of them appearing? How often will they appear in a year? Right? I mean, if it's going to be very rare, right? Then wow, you 1 year, okay lah. I mean, it's not wrong to trade as little as possible. Never trade means you win already, okay? But yeah lah, like I also say, right, you're in the market, the byproduct is to make money, right? So if there's no, and the danger will come when you keep waiting for your pattern or something to happen, and they just don't appear, then you start to feel the excitement because you keep looking at chart. Wow, I must make my time worth it. I need to do something about it. Okay, then that's where you start to overtrade. That's where you start all this trading psychology kind of, I mean, the aspect of it. Okay, but of course that one, yeah lah. Fourth week we will talk more into it because I think that one really very important. The whole webinar during the fourth week is just going to be solely on trading psychology and risk management. Right, because like I said strategy wise say real, anyone interested you later you just talk to me in Telegram okay, 15-20 minutes more or less I can give you the steps how to go and find something already. Okay, but what works for me might not work for you. Okay, you need to be very clear of the strategy itself first. Okay, whether you can follow the method exactly. Okay, because like I mentioned I share with many people on TA. Okay, but say real, end of the day, everyone will have their own understanding because maybe let's say you just basically like to your hand very itchy okay, your hand every time need to scratch, right, need to click the mouse. Okay, so you just keep triggering. Okay, but you cannot say that because the fact that you keep triggering then the strat don't work. Okay, because the first few one maybe yes it look like okay you are following the strat itself, but slowly over time you will realize that you are basically just chasing only. It's just fear of missing out or you just revenge trading, stuff like that. Okay, so if you have any questions, you can just throw it in the Q&A. Okay, for now I will just go through. I will just faster finish this pattern recognition. Then we can faster jump into the charts. Okay. So next one, double top, double bottom. Okay, this one I think we see very often, a lot of times, like everywhere. Okay, this one I think you also can spot on. Very simple to see. Basically, you have two tops. Okay, for example, your double top is two tops. Okay, higher high with a higher low. Okay, in some cases you will have a high and a higher high first, then they start to slam the lower low. Okay, this movement will be way stronger than the first movement. Reason being, if you have a movement coming off the higher high, means price actually tried going higher but failed to hold and get rejected. So if subsequently they shift towards the lower low, let's say they break that line, okay, for example, this double top line, right? Then the momentum itself will really push price to go even lower. Okay, but I mean, with that being said, then later we will talk even more in depth now. Okay, now it's just the recognition is basically two tops, one level, price start to break, price continue going lower. You have two bottoms, okay, bottom wick, okay, price start to hold at itself. Okay, then you see something different here. You see this double bottom very different because it is based off a trend line. Okay, so with this said means you need to identify your trend line also. That trend line, I mean trend line, yes, trend line is a diagonal support and resistance. Basically it's the same thing. Okay, but if you have look at it even closer, you will realize you have levels here, you have levels here. Okay, so basically you're waiting for levels to break, then price starts to hold higher for even for your pattern if you want to trade on patterns. Okay, end of the day you are still basically searching for the key level where price break and will make a difference in how the price will move from here. Okay, then after double top, we got triple top, triple bottom. Basically the same thing is basically they just keep rejecting off the top or the bottom. Okay, is almost, I mean, the only difference is it got one extra one. Some also got 4 tops or 5 tops or how many tops one, okay, or bottom. They can have as many, but you just need to understand that this structure itself, triple top or double top, okay, or even head and shoulder, right, is basically you are just waiting for price to break out of a certain area, right? If you just, I just go back to the slides again. Okay, head and shoulder maybe not as obvious. Okay, you have one extra like fake out area over here that which they broke away from the left shoulder, right shoulder, for example. Okay, but if you just look at it now, all this movement itself, you are waiting for that neckline or that area, this line itself to break. Okay, then this line, what is it? This line is basically the key level, right? It's basically a key level you need to identify to know at what point when price start to break higher or lower, the price will continue in this direction. Okay, so yeah lah, that's why I keep saying if you look at it again and again and again and again and again and again you just keep looking at it every day, day in, day out, right? You will realize, yeah lah, basically they are just trying to have a range area, a base, okay? They build already, then they're just figuring out, okay, should I go higher or go lower? That's it. Then we just need to figure out where they want to go, get already. We just follow. Okay. Okay, then now since I'm on it, I see a few questions, right? Then it's based on, it's for this pattern recognition. Jane asking, double top, triple top look like head and shoulder seem similar. Yes, you are right. Yes, they all look the same. Okay, head and shoulder, double top, triple top, 4 top, 5 top, 6 top. Can be many, many tops or bottom. Okay, but they will always look the same because basically they are just a range area where they just keep getting rejected from either side. Then you also cannot say, for example, I give you one example. Like you see, I'm not sure if you can see my mouse, okay, on the left photo of this triple top, right? You see, triple top breakdown, that's why you have this bearish movement. But if, let's say, the triple top, they rebound again, then it's what? Is a triple bottom or a triple top? You see, that's the problem. Now we have this dilemma already. Okay, it's because they, illustration easy to see because they broke down, they broke down from the level itself, right? Then they all subsequently form a bearish movement. Oh yes, you got triple top or bearish movement. What if the bearish movement don't appear and give you a triple bottom? Then how? Then you confuse, got triple top, got triple bottom at the same range. Then how? You stuck already, right? But I'm not saying that it don't work. Okay, but the important thing is you need to understand the point of entry is at the break. Okay, or at least you take at the retrace. Okay, when they break, then they retrace. Right, you don't straight up, you see, oh, triple top form already, I anticipate it's going to drop, you're going to go. It's kind of anticipation, basically you try to sniper something, right? Your risk is lower, okay, because you have a lower stop loss, a tighter stop loss, but the probability will not be there as, the probability will not be as high, but it's not saying that you cannot do that. Okay, so patterns, basically these are, there's a lot more patterns, but this is more of the few more commonly, spoke of or shared patterns that we will usually see. Okay, I pass the time to Xiong. Thank you.
Yeah, I think Jane has a good question. But I think you see, Jane, I think I agree with you. Some patterns that you see might not be what I'm seeing. So I think Ying said something very interesting is when we look at triple top, double top, how you know it's the bottom? So we look at triple top. Yeah, then wow, really if I buy in at the lower low, because I know it's gonna be triple bottom already. And suddenly got what if four bottom or 4 top? Then like how? What am I going to do next? Is it gonna be a flag? After this suddenly go up all the way, then I call it a flag. So it becomes very confusing in terms of spotting patterns, and that's what we want to come across it's not so easy in terms of probability. We are out here to earn money if you love charts, go ahead. We're not gonna stop you. You can sit there watch charts and wow, head and shoulder wow, good Then that's but that's not what we wanna come across. Bring all this knowledge across to teach you how to spot patterns It's to let you all know the rates of spotting pattern is way lower than just looking at the general support resistance lines, which is the fundamentals I would say. So once again, Jane, I think pattern wise you might think I think if you look at the B51B, so if we go back a bit more, the head and shoulder part, So you see, to you, it may seem like an uptrend, but on the right shoulder, what if I think, it's a downtrend, then it's no longer uptrend. So usually they will only see the pattern when it's almost like three quarter. So you'll know that, hey, this one then head and shoulder, then okay, maybe it's more towards the bearish side already. But then you wouldn't know, like, you see one shoulder, you can somehow analyze, hey, got one head, one shoulder coming out. Cannot, right? I also cannot. So it's gonna be difficult to spot patterns. Okay. What if come out one left shoulder, then the head not as tall, then become a triple top or triple bottom? It's also very hard. So it's not so easy to spot the patterns, but in terms of knowing the pattern recognition, it's also important, because like maybe you see, wow, the right shoulder is forming. What you can do is you can observe the market. I wouldn't say you see right shoulder, you say confirm bearish, the shoulder can come down and break the neckline. But it's always good to observe, look at where the trend is going. At the end of the day, we are looking at your support level. Is it gonna break or is it gonna hold? And that's what we want to come across. Yeah. So with that, I think that's for the pattern recognition. I'll hand my time over to Ying.
Okay, since I see also a few Q&A still on this, Jane, I just want to say also, right, like Xiong explained very clearly already, like pattern itself, it's not an anticipation kind of the pattern. You don't anticipate the pattern to be formed. Okay, the pattern is there for you to see first, then the subsequent move will come. Okay, and the tricky part is because if the pattern is there, everyone know that this is the pattern, everyone is going to trade the same way, then if everyone going to win, who's going to lose? Okay, so this one you start to think slightly further deeper. I don't know if I can say this. Someone has to lose for someone to win, right? So if it's so obvious that it's there already, right? I'm not saying that it won't work. Okay, the probability will still be there, but it's just that the market sentiments itself will start to be slightly more haywire in a sense. Okay, because end of the day, all these prices are just running by market sentiments, which is back to supply and demand. Okay, TA is all basically just supply and demand. It's just who is willing to buy at more expensive or who is not willing to buy at a certain price, right? That's how you win all this price action. Okay, and also with this 5.1B figure, okay, since we are on it also, yes, initially it was an uptrend. Okay, you have new high, higher low, higher high, higher low. Okay, the only time you can really confirm that they start shifting to a downtrend, right? Your right shoulder is an indication. Okay, it's not a confirmation that they're going to go down yet. The only confirm is when price start to break below the neckline. Okay, that's when the head and shoulder will make sense. Okay, but because initially it's still an uptrend, yes. Okay, but you won't know that when will this uptrend really stops. It's only when you stop having higher high in a sense. Okay, then that's where price start to form new higher low. Then they start to move. They will shift the market structure to a different direction. Okay, but with that being said, your trend also there's different kind of trends. Okay, you have a major trend. Okay, running damn long already. Within the trend itself, like I say, it's a zigzag. Within the trend itself, you would have minor trends coming down, right? They will start to come down. But within this minor trend, you will have trend going up. Okay, so that's the problem. You need to firstly, I mean, okay lah, by right, this is all in trading psychology, right? But I just since we are on this, we touch on this already. You need to understand what kind of trader or investor you are. How long are you going to hold? Are you going to hold it out, or are you going to just play for the day, or are you going to swing? How long are you going to swing? 1 week, 2 weeks, 1 month, 3 months, 6 months, whatever. Okay, you need to identify that for yourself first. Okay, because with that, right, then you will be able to tell what trend really matters to you. Okay, like can I really try to take an intraday trend to play out the movement? Yes, every start of a trend, right, will start from the smallest time frame, which is like basically your ticks or your 1 minute chart. Okay, every trend will start with the smallest guy, slowly building up to the bigger guy, bigger time frame. I mean, okay, so it's not saying that lower time frame trend won't start to run. Okay, but at the beginning you cannot identify it properly because it's basically you don't have any telltales at the very beginning. You need for them to start building something, okay, start to show some change in their market structure, then you can start to identify. Okay, but by the time you identify it, right, I wouldn't say it's late. I mean, you are still early if this is going to be a reversal. Okay, for example, price start to slam already. They start to build from 1 minute chart all the way to weekly. Okay, take 1 week to build one range. Price start to break. Okay, you trigger here, okay, the movement itself, they potentially still can cover back to where they drop from. Okay, potentially lah. Okay, but that's why firstly you need to understand now what kind of trader or investor you are. With that, then you will know how far you need to see. Okay, can you afford to look at a lower time frame? Okay, can you look at a smaller time horizon? Okay, all this I think there's a lot more into it, but I mean, very difficult for me to give you pinpoint like what kind of time frame suits you. Okay, if you like that, then okay lah. You give me later. You give me your feedback. Okay, you tell me, wow, YJ, you help me cater to me. Okay, what kind of things should I look for? Okay, let's say you tell me you work 9 to 6. Okay, or 8 to 5. I mean, working lah, basically working at night. You want to look at US market. Okay, what kind of strat I can play? What kind of risk you are willing to take? You tell me in the feedback form later. Okay, then I see I come up with something lah. Okay, but otherwise actually there's a lot of combination of how you want to trade, how you want to touch the market, how you want to play lah basically. Okay, so with that I think I answered the question. What should be the minimum time frame one has to set when trying to identify patterns? Okay, you can identify patterns across all time frame. Okay, TA, I mean the fun part about TA, right, is it's not you need to use a specific TA strategy to fix into a specific asset class or equities or anything. Okay, because across everything, right, what you understand as a broad picture for TA, you basically can use for everything. Okay, but of course minor tweaks around lah, like some, like for example, I give you an example, like gold recently very volatile, right, because of the Israel Hamas war. Okay, they very volatile. They shoot all the way to 2K plus already. Okay, then came back now 1960 plus. Okay, now this kind of volatility, right? I mean, of course, you wouldn't see this kind of volatility in maybe like equities. Equities got one move very slow one. I just throw it out there lah. Maybe Neo lah. I don't know Neo fast or slow lah. Okay, no, sorry. Maybe like Grab. Very long no volume already. Are you? Yes, TA idea concept wise, yes, it work the same. But if the volatility is missing, right, then of course some won't move the same way lah. Because you end of the day you will still need volume to push something. You need the volatility there to push the price. Okay, so what time frame to set? Basically, identify patterns you can use any time frame. Okay, it's just what kind of what's your personality lah when it comes to trading. Okay, then with that you would know what kind of minimum, like how low you want to go lah. If you are scalping, which I don't advise anyone to do. Okay, scalping is quite fun lah because every minute the candle change already one, right? But I mean I don't know how to make it work lah, so I don't know. I just go for intraday, which is minimum. I will look at least like 30 minutes, 50-minute charts. Okay, so for pattern, basically first minute you can look, weekly you can look, monthly you can look, anywhere lah. Basically they will just form patterns. Okay, so is there an ideal time period for observing trends? Is an intraday trend as effective as an intraday trend? Joseph, okay, thanks for the question. This one, right, this one will be slightly different, depends on okay, it's just basically your agenda when you are in the market. You get what I mean? Like, how long are you going to hold? If you are going to hold for a very long time, then of course you need to look at the trend in a more bigger picture. Later I give you an example lah. Okay, I show you live chart, but now I just explain to you first. I explain to everyone basically. Okay, time period usually the easiest way to stop yourself from thinking too much. Okay, all of you, if still haven't tried using TradingView, go and use TradingView. The cheat code I think show before, you TradingView, you do whatever thing, right? You just alternate R. Alternate R basically give you 9 months data. Okay, later I show you. They give you 9 months data. It's good enough for you to swing for quite a while already. The data itself is enough already. Okay, unless you're going to invest, you tell me, okay, what's there? I want 5-10 years. Then the one, no choice, you just zoom all the way until you can, then use line chart, go and determine what's the trend. Okay, but of course 5-10 years I cannot, I say real lah, I cannot do magic. I tell you, oh, 10 years later at what price. I mean, there's no way lah. I only can tell you probability in within this period of time. Okay, you want 5-10 years, I cannot give it to you. Because if you are talking about even longer, right? Okay, then you got all the fundamentals coming in lah, you got the macro lah, all these data, earnings, I mean all these fundamental analysis, right, will come into play already because it's so far ahead, right? That I mean, everyone don't even know. They're just thinking, okay, by then maybe they come up with something that everyone don't have yet, or the first mover advantage, then the thing fly. Okay, but at the current point, maybe they don't do anything. But because the time frame is too long, right? There's no way you can win more. Okay. So more realistically, if you are just looking at, let's say, for 6 months to 1 year, right? Basically you just look at 9 months, right? You more or less can cover you already. Yeah. 9 months is what you want to see the major trend, okay? But just take note, the minor trend itself is within the 1 to 3 months. Okay, later I will show on the chart itself. Okay, then Robin Lee asking, okay, can we fundamentally say that the chart also reflects market sentiments of a particular equity? Yes. TA itself is basically the reflection of reflection of market sentiments. It's just how people view the certain product, okay, the asset, whether moving forward, as of now, okay, yes, as of now, they confirm a thing also, okay, moving forward, the moving forward is, like I say, it won't be like 5-10 years kind of, it might be, okay, but most of the time, people are just playing within this period of time, okay, like the shorter time period, okay, 1 year technically is short already, like we are talking about 10-20 years, okay, that one I don't know, you need to go and read their financial like reports and all this, which I mean, yeah, that's why I say I see whether it suits you. Okay, if it suits you, then it's fine as long as you make money. Okay, so fundamentally, yes, it is basically reflection of market sentiments. Okay, another thing that I read recently also, right, is those that have more information, right, basically will move the price already than those that don't have. Okay, those that don't have basically just following only. Okay, it's just riding on the hype. So by the time they try to go in, those that have extra information, there's only two things they can do. They can sell it to you to buy, then they take profit, or they continue to form a level and for further movement outwards or downwards. Okay. So yeah, so with that, I think Xiao, anything else to add? Otherwise, we go to live charts. Okay, don't have. Okay, then hang on. Let me see something. Okay, this part, Xiao need to take over first. Okay.
Okay, I'm back. So this webinar is solely sponsored by Phillip Securities. Okay, it is where we are working at. So yeah, sponsor. Right. So currently we have the cash rebate. Like you guys are, we got a few promotions ongoing. Go to our website poems.com.sg or .com lah. Then you link you there. So we have this promotion tab. Just click on it lah. Then got what promotion just take lah, right? People give promotion, don't want take. Well, I also cannot help lah, but yeah. So now we are just showing you like a cash rebate because we just started our options trading. And for those who do not know options is starting to get very popular. And it has impacted us. So we are working on our options. We are encouraging people, we are teaching people how to trade. Likely after this webinar series, we're gonna start our options series. So if you guys are interested, do stay tuned. We already got a few market journals out to explain to you what is options, what are they. Yeah, please go and read them. It's very interesting. It is related to stocks. So yeah, something that you guys can take a look. So next we have our P3 community. So you guys using P3, I know some of you still using P2 app. Your app P3, we got a community group. If you guys want to join us, please join us. We got a lot of different groups. We got different specialists handling the group. So yeah, cheers to the communities group. Feel free to post whatever you guys want. So next, yeah, these the different groups, the major groups we have. So yeah, see, we got TA group. Yeah, so you guys can join us there. If not, if you guys need trading ideas, take a look at the other groups. Yeah. So next, okay. So we have a global markets team. They are posting this group, Telegram group. If you guys haven't scanned, go and scan. This one is just gonna tell you about market information. It may vary from Singapore, Hong Kong, or US market, but I think on a daily basis, there's a lot of information coming out. So if you guys want some, like you want to catch, don't know what market is going on, you're working, then suddenly then got some news if you guys want. If not, next we have what we have technical analysis Telegram group. So this is done up by our research team. We have Zane. Xiong is doing TA for, I think, on every Monday, right? Yeah, every Monday. So you guys can join him. He's doing TA. You guys got any counters, want to review? You're like, wow, I want to buy this, but I don't know when to buy. He will tell you the price to buy lah. At least he can tell you the price to buy. Okay, so yes, okay. I think we have answered a lot of questions, but we're still gonna answer questions because we have quite a few as well. Let's see. Jane, trading view, many indicators, don't know how to use. Okay, so I think for those who has been using trading view, I think they have become quite restrictive for the trading view itself. Like you used to be able to do a lot with trading view, but now it's much lesser. But if you do not know which indicator to use, don't worry, Ying don't use indicator. Okay, but I think one thing is as we move along the workshop, we're gonna introduce you to a lot of different indicators, but we're gonna start slowly by introducing you starting next webinar. It's gonna be on the basic, but the important ones that we want you to know lah. So at least those, if it works for you, it works because there are a lot of different indicators. So maybe now I'll hand over to Ying to show you guys on chart itself. Yeah, Ying, over to you.
Okay, finally we are back into trading view charts. Okay, got any counter or anyone can just throw me one counter? I can make it like a counter review, okay? But I will use that for today's topic, okay? So it's not a straight up just give you like what level to look out, that kind of thing, okay? You just throw me any counter, got any don't have, then I will just pick already. Okay, because what I think today session, right, is I think it's very light already lah. Okay, we are just talking about TA in general, right? TA in general, then after that we're talking about how you identify your areas, right? Which is already enough to really do TA. But because it's a workshop, okay, next week we will go into basic indicators first. Okay, like EMA, SMA, volume, ATR, average true range. Okay, then subsequently we will slowly move into RSI, MACD, FIBO, this kind of thing lah. Okay, which we will still share lah. We will still share like all this information. Okay, so I see all the counters coming in already. Thank you. Okay, so first one I see Tesla. Wow, a lot of people want to look at Tesla. We look at Tesla first. Okay. Tesla. Okay, hang on. Let me just okay, so Tesla, now how? This one 1 month ago this chart. Then how long broke already? Gone already, disappearing. Okay, but doesn't matter. We remove everything first. Okay. So like I tell you, if trading view you don't know what you want to do, right? You see how far should I see? Very far. Yeah, Tesla is still uptrend technically. Okay. Yeah. If I want to draw trend line, I show you how to draw trend line, right? Wait, I don't know why the line like that, but hang on. Okay, if you want to draw trend line, okay, Tesla basically they are still trying to run as an uptrend from back then okay, which will it make sense to us? It won't, right? Because price is not even here yet. Price is so far away, okay. So if even whatever, I mean, okay, then sorry, let me say again. So depends on what kind of, like I explained, right? What is your personality in the market, okay? Generally, I will always tell people, you see trading view, you don't know how far to zoom, how near to zoom, right? Always just alternate R. What is alternate R? Alternate R is basically, let me show you, reset chart view. Okay, you see this one, alternate R. You just click. Okay, they give you 9 months data. Or I don't know, 10 months, 11 months. Okay, basically they just give you the best feed. Okay, best feed good enough, more than enough. Okay, because from here, you see, just from this chart itself, I removed this very long ago line now. On this chart itself, what can we tell? Okay, we know that, okay, from January until now, okay, price, major trend, they probably running like that initially, okay? Initially, they were running like that. That's why price start to break. At this point, you don't know whether they break, you will think that they will hold, right? But why it's important to note that not that every trend line support or trend line resistance, you go and short right away, okay? Because you need to understand, this movement itself, basically, this whole thing itself is a range. Okay, if you take this area here as a fake out, right, the thing is basically still running in this range area. Okay, then if you start to think, oh, you just saw a pattern very familiar, why got like one head and shoulder? But no I mean, I'm not going to try to spot a pattern for you here Okay, I just try to walk you through the thought process, like how can you tell from the chart itself what should you be looking out for moving forward from here? Okay, because all these pattern are very easy to draw on hindsight one. Very easy. I just like that. You see, I draw. You already know, oh, yeah, got head and shoulder, got range, got uptrend line broke. Yeah, but when it's happening at the point, how do you tell? You won't tell. So, I mean, you won't be able to tell. Okay, but what's important now is I want to show you how you can make use of. I mean, I quite sad to say that support and resistance is very simple to understand. Okay, but then again, is what really help you to understand easily, okay, firstly, and also how you can just make use of that and try to make some money lah, basically. Okay, because I just give you example okay, now that we already look at the chart, same thing lah. I mean, this is hindsight, so very easy for me to draw one. Support and resistance, how you draw. Okay, you firstly okay, if you don't know what to do you really like you see chart, first time seeing the chart, okay, or maybe see many times but you just know that it's a chart but don't know what is it. Okay, identify from the left side first. Okay, we already alternate R already, man. We identify from right side, left side, sorry. Left side is history. Okay, so 3 steps is the same as I like to put everything into 3 Okay, you have 3 phases. Now this one I give you 3 steps. Okay, as long as you follow these 3 steps properly, right, you more or less should be able to tell your levels. Okay, then you from there you want to know how to trigger from there, then I think you can just watch our webinars all the counter review. I always give a bit of, I don't want to say tips what is it called? I give a bit of you know lah, you all know lah. I will say something that I shouldn't say, but I say discreetly lah. You all know, I know, everyone know. Then you just watch back the videos, okay? But I don't want to nag so much, okay? Even though this webinar, okay, this webinar is 8 till late okay? So you'll be here the whole night. Not whole night okay? We give chance a bit, but we will try to do it as much as possible. Okay, so back to this I just give you the most basic how you look at chart, okay? Since in subsequent weeks, right, we will still use back this same theory because you will always need to identify your support and resistance first, then you can make use of a trend line, then you can make use of indicators, okay? Because all these will come into, they basically need a confluence. They don't work alone. The only thing that work alone, right, is support and resistance. Sad to say, but you don't need a confluence for support and resistance. You need, okay, maybe you need confluence from price action, okay? But price action itself is the candlesticks itself already, right? So you don't need anything else. Okay, so you look on left, you don't know what to do, you just draw your support and resistance. Okay, which is, I mean, you take one time, first time you don't know, subsequent rejection, you confirm that resistance is formed. First time you don't know support, subsequent rejection, you know there is a support. Okay, and it's not a single price point. Okay, I know sometimes I draw one line. Okay, I got this habit because easy I just draw a line. I just, wait, what is this? Sorry. Okay, so anyway, yeah, draw line easier. I just draw. Okay, but this line itself is not that. It's not 161.44 straight up. No. The level will always be a range one. Okay. Then the range is basically, I mean, yeah lah. If I want to draw it, then I will just take. Basically, I take to the lowest point. I take to the candle that created it. Okay, their body basically. But otherwise, I will just draw a line. I know that as long as it's within this line area, unless they close below or subsequently continue to reject, then I know the price action is rejecting it. Okay, otherwise this line alone is good enough for me to know whether they close below or higher. Okay, so you have your resistance, you have the support from back then. So you know that resistance subsequently price went higher already. Okay, they already formed if you want to use the 4 stages, this is accumulation, then you have this markup. Okay, markup to where? Markup to you don't know what it is yet at the point in time. Okay, but basically I will just take it as you have a rally, you have a range again. Okay. With that being said, okay, all these are hindsight so it's very easy for me to tell you, okay, this guy here is a range, correct? Because everyone also can see that this basically price has been trading within it, except for this area where they start to break out, break down okay. Then they break to where? Break to the previous resistance turn support area, okay, this area here. Then they get rejected. Of course, at this point, can I confirm they reject? No, I won't know that they reject until they come back to this range. Then I know, okay, price might start trading in this range again. Okay, so the movement itself, like if you just look at it in phases, right? These 3 phases you let them run out. If you are not in the move for the rally, you let them run out until they stop. Okay, then you try to find something. Or if you are in the run, then okay, good, you let them run to your next level, which you probably can find here also lah. Like I just give you an example, you know, oh here double bottom, triple top. This one just now we talked about pattern recognition, right? Triple top. What happened after that? Well, price slam. Oh, triple top can use, right? But no lah, because it's basically support got breach, support broken, price continue go from a high level of rejection, price continue with momentum. Okay, but all this is basically just one range, man. You look like this is a range. Okay, I put this guy here. Where's the guy? Sorry. I put this guy here is also a range. Okay, so you just need to identify where are your ranges, which side they break, basically. Okay, so we know that here previously was a support area, right? Okay, you just drag this guy, then you know your target area already. Because if you later, later that one I share. Okay, but basically a broken support eventually will turn into a resistance. A broken resistance will eventually turn into a support. Okay, because all these boils down to supply and demand. Like I explained initially, supply form resistance, demand form support. Okay, it's not vice versa. Why this phenomenon of your support turning into a resistance happen, right? Is because at this point of support, by right, everyone thinking is okay, at the support is demand should be very strong. A lot of people should be buying. Why? Because price is low. They already show rejection previously. Price is going to go higher. A lot of people want to buy. But if price fail to hold higher, right, and close below, right, basically a lot of sales will be coming in already. Okay, because you basically supply and demand is basically 1-to-1. Okay, trading is a zero-sum game to begin with. All right, so you have every buyer, you need to match a seller. Okay, but when price starts to go lower and lower, right, people are in a way less willing to buy at that price, the current price. That's why people keep trying to sell even lower. They just keep undercut you. They just keep trying to sell cheaper and cheaper and cheaper, right? So you have price moving downwards off. Okay, but because of this movement over here, back then, right, the level here will turn into a supply. Why? Because this was the point where the supply basically is just more than the demand. That's why price will start going down. Right? So with this supply here, eventually you know that okay, they might form into a resistance level. Okay, then it will be the same idea like is when you are drawing your support and resistance, right? You will see a lot of these kind of levels, like these kind of fake outs that happen now. They try to move higher, try to go already, but fail to hold higher, fail to sustain price higher. They continue to come back into the range area. Okay, I know now got a lot of drawing data. I simplify it for you, but I just want to explain finish first. Okay, so you basically have this range area, right? You don't think about this circle area. You don't think about this circle area. Basically, price is trading within this area. Okay, then this area will become where you need to take note of again. Because subsequently, if price were to continue breaking higher of 275, you potentially will have a movement upwards, right? Because you will have higher high, higher low, higher high, higher low. It's the same idea. Okay, identifying that the trend might start again. Okay, because you have a low here. Here was a previous lower high. You have a higher high. Okay, you have a higher low. But what happened next? You have a lower high. At this point, you still don't know because okay, you want to talk about patterns, right? We can talk patterns. Okay, you have a triangle here. Okay, we have a triangle. We have a rally. We have a rally and a symmetrical triangle, which is a flat. By right should go up. Just now we see the slides already, right? By right should go up. Okay, but now I just showing you pattern recognition. Okay, you all recognize this pattern, right? Just now we shared in the slides. Okay, which is why slowly I don't like to use patterns is because it's basically I just trying to snipe off something. And if in the day itself, there's other catalysts, right? The pattern probably not going to go. Okay. And the pattern, you know that this contracting triangle, right? They are getting narrower. Okay. Basically, price is either going to go up or go down. The only time you will know is, yes, you put a buy stop here, you put a sell stop here. Basically, at their previous lower high. As long as they higher high now, then you know that, okay, it's the same idea, right? Back to the cycle itself. If at this point, we don't care about now first, okay? This one I delete away. I cover first. We don't talk here first, okay? Because all this I shared earlier, right, will help you think through what you can look out for in the current price, okay? You have this area of this triangle trying to reject levels, okay? But you don't know. Like just now I tell you, okay, you have a support, okay, you have fake out, you have resistance, you have fake out, you have all this kind of stuff, okay? But at this point, you only have the better choice for you, okay, you probably will only have, you probably The only time, okay, sorry, I need to rephrase. The only time you know that the market structure is still bullish is when they start a new higher high. Okay, reason being they have a low, they have a low, they have a higher low, you have a higher high, but you have a lower high. Okay, so you don't know whether this guy here will start being a new higher low for a new higher high. Okay, so your only safe bet is when price start to be here. But of course, this is being very conservative already lah. You are just trying to make sure that confirm the thing going to hold confirm already then you go. Okay, but if you are slightly aggressive or riskier, right? Basically here you have your trigger already. This candle. It's not wrong. I wouldn't say it's wrong. TA, please make sure TA one thing that is very, I mean, which is so fun, right? Is because there's no right or wrong. Okay, you can just share your ideas like me. I just share my ideas now, right? I know that there's no right or wrong lah. Okay, it's whether you understand or not. Because the way I understand it might not be the same for everyone else. Okay, so if you're aggressive, you can take this as a new higher low because candle already close in the support, close above. I mean, basically close at your trend line or whatever line that is. Okay, even if I shift this line to here, okay, we just look like this. Okay, your trend line. Okay, this is the trend line that I took from alternate R. Okay, alternate R, yeah, it's the same trend line. Okay, there's no difference to what I draw just now also. They are still at the support. They give you confidence that okay, as long as price hold here, you can go. Okay, aggressive traders will have triggered that for sure. Okay, then your SL, yeah, you SL here lah. Why? Because as long as they lower this guy, right, you know that the structure is changing already. And the most recent time they are moving on a high, low, lower high, you are just short of this lower low. Okay, then with that, I delete everything. You know that price currently is trading at a lower low, right? Because you would have this trend line here. Okay, maybe this point not as nice. Okay, you have this trend line here, showing indicating you have a high, you have a low, you have a lower high, you have a lower low now. Okay, so with this being said, right, can you take a long? Not saying you cannot. This is the fun part also, because the thing seems bearish, right, but doesn't mean you only can short only. Okay, that's the difference. Because of course, if short only, then of course you need to use options lah. That one, yeah lah. Soon you have options webinar also. Okay, but okay, minus that, right? This is a bearish movement. Okay, if you recognize pattern also, right? Basically, this pattern is a descending triangle. Okay, it's a descending triangle. As long as price here come here, they reject here, they will slam again. Okay, this is the pattern. This is a pattern. I'm not saying that it's confirmed. This is a pattern only. Okay, but in terms of drawing now, you know that price already lower. You know that previously support was broken. Then they created this gap down area. Okay, this gap down area. From what? From earnings. Yes, from earnings. Okay, so you take your support area, which in turns will become your supply level. Okay, but because this is a gap area, they open here, you know that there's a lot of supply from this guy itself. Okay, that's why they continue the movement to go lower. So basically now Tesla is just trading on this very delicate level. If I just going to give you your range, right, it's basically just like that only. 195.72 to 222.29. Sorry, 225.29. It's basically a V shape lah. It's just, will they form a range? I don't know yet. Because if they can continue push up to this level, right? Okay, potentially they hold back into range. But the only confirmation will come when they make a higher high. That's the only difference. Okay, but can you take anything off here? Can. It's the same story where I shared with you all about the Roblox. I don't know any of you remember Roblox from few weeks or few months back lah. Right? It's the same idea. You just need to make sure that price continue to stay higher. They can cover this gap down area. Then if they can stay here, then they continue this zigzag cover. If otherwise cannot, they form a range here, then they will come like that. Right? It's the same story every time. Because if you understand the big picture of the market cycles, you understand that as long as these levels are still holding, means they are still in the sideways movement, means they are not going anywhere, means you should continue to wait. You should continue to wait, basically. Okay, so I know I say a lot for this Tesla lah. Okay, by right, each chart I'm only given like 1-2 minutes to draw finish lah. But I think I shared quite a bit on this. I'm not sure. I mean, everyone understand or not? If you understand, you at least give some response. Send me a 1 or something in the chat. At least I know that okay. You understand. Don't need to understand everything. Okay, at least you understand the gist of it, like how to identify. Okay, if you don't understand, just ask me the question. I will just explain again. Okay. So have or not? Or okay otherwise, I think this one should be very straightforward lah. It's very straightforward because if you want to increase our YouTube views, since I'm on this, just watch back all my TA webinars are mine. You see my face there, you watch, you will realize every webinar I say the same things. Okay, there's no difference because to me this is how I understand it, this is how I'm going to make money with it, this is how I'm going to share with you. Okay, of course there's a lot more tiny details that I never really talk about lah because it will be too long already. A lot more tiny details, but general idea, right? You just need to understand the three phases. The three steps is basically history. Okay, history. That's why I say, okay, initially you look at your left side, see what they do, then you slowly read towards your right. Okay, that's the history. What are price trying to do back then? Because did they create a level that makes sense, or did they just not do anything? Okay, with the history you will have your approach. Okay, approach is how price starts to move towards your level of interest, your key level basically. Okay, then with that, the last point is the most important, is your recent. What are you going to do now? Like you know that price is here, so what? Yeah, the price is there, you ask yourself, so what? Then you are not doing anything, then you don't need to even see and look at this chart, right? So the last one, recent time, what is it? So basically it's price action at that moment. Okay, is there anything I can do to it? Did they change any structure that I can do something about? Okay, so you just remember these three steps. Your history, you know how they approach, you find your approach. And then sorry, you find your price action. Okay, then with your history, you would be able to identify all these levels. Okay, then the approach is where it become more exciting, which I will just continue to share. Then you try to absorb as much as you can. Okay. Okay, then I will just go to the next chart already. I think Tesla more or less is like that lah. It's just you just waiting for this area only. You don't know whether it's going to range. Okay, if they range, then you have to continue waiting. But if they start popping higher or lower from here, right, then you will know where you want to do something already because it's the same idea, is even if let's say I delete everything, we just talk about patterns now. See, just now we went through, right? You have a head and shoulder. Of course, this one not in line because you got this fake out. Okay, but generally you have left shoulder, right shoulder, lower high, price broke. Okay, so if you have a retest, price should come like this. Okay, should for head and shoulder. Okay, but I'm not. Sorry, I need to delete this line first. Later your screenshot. Okay, so it should move like this. Okay, with a head and shoulder pattern. Okay, but the confirmation will come is when price start to move higher and you know that they start rejecting back into this level of 210, below 210 basically. Then they start forming lower high, they start forming lower low. You know that the thing is coming down already. Okay, otherwise from now, as of now, if you want to do anything, is basically just waiting for either side to break. Okay, next one, Xiaomi. Okay, Xiaomi, I see quite a lot. How to identify entry point? Wow, entry point, I think I cannot tell you specifically but if you listen to what I've been saying, right? Firstly, I need to understand. Basically I need to understand your characteristics, your personality in trading. Okay, because if you are telling me you're going to hold it out, okay, hold on to deal life like crypto like that, hold then of course there's a lot of things that I don't need to share with you on TA already. Your entry point doesn't matter already because you holding it means you think even further already. Any price movement within this period, you don't need to care because you are the ones going to hold for 5-10 years or whatever. Okay, but if you are talking about swing, swing, if you are talking about like within a week, 2 weeks, 1 month, 3 months, the kind, fine. I cannot give you the levels. I say what I cannot give you any price to trigger or SL or TP. What I can give you is I show you the level, okay, then you also can pinpoint okay. Through this workshop, I already show you how to find the levels, right? So I give you the level, you also go and think back what I said, then you should know what is happening already Should I hope. Okay. So Xiaomi, okay. Someone asking how to identify the entry point. I mean, for this kind, they already run already, right? Basically, as of now, you cannot do anything yet, okay? Because why? If they are running off extremely early, you don't have level from this alternate R left side, right? You need to look further. You need to find your next area where price did a drop base drop. Okay, drop base drop basically resist. They drop, they form a range, they drop again. Okay, then how you find your level? You just go in, you find the point already. Okay, you go in, you take the highest, you just take the candle. Okay, so potentially here will become your new ceiling. which is very close, so you cannot have entry. Your only entry will count is when price start to hold above and form the zigzag, which you will probably have a movement like that. But to have this, you know that this level is not tapped before. Okay, it's the first time price coming back in. You will probably see price start to range here first. Okay, why? Because the cycle is the same. You have your initial rally already. So what they want to do next? What's the phases? Okay, you all need to just remember the phase. You only have 3. You have a rally already. Of course, this rally, like I say, sometimes with data and earnings, this rally can like that. It's one straight line go up. Okay, but very rare lah. So most of the time, you just need to always take note. If you are not in the rally yet, okay, then you look for where they are building a small area, which is your range. For example, you see over here, you know that this is a small rally first. I did everything first. Very messy. This is your small rally. Why this is a rally? Because previously you have your range area broken. Correct? This one everyone can see. This is your range. They broke. You have this rally. Rally to where? Rally to create this small area. Okay, this is like your flag just now you shared. Right? Flag or pennant. It's the same thing. Then you have this continuation movement. Okay. So your idea of getting a trigger, right, is always if you miss the initial phase, and you feel that there's still room to go, okay, for now, I mean, I don't know if you still have, but I spotted this level, which previously broke from a support, okay, so this level here might hold quite a significant level, okay, because they broke away from this structure itself. So they are coming very close already. When will they form this small guy over here? I'm pretty, okay, I don't want to say pretty sure. I'm sure that they will come here like that first, okay, then you will have a range, then you wait to see if they break here to zigzag outwards or zigzag downwards. So it's basically just like this. Okay. So history, approach, present, basically present, they already run. I cannot do anything. Okay. History, what do we have? We have levels from the back. Price is coming into this delicate area. Then you just need to take note. Then you know the approach is very bullish into it. Doesn't mean it's going to continue running. Okay, very bullish into it. Then you must think of the next phase already, the cycle. When they already coming into this rally already, you think that okay, of course there's probability that they might run but then you just wait for them to really clear this, start this zigzag again, then you take from here. Because if they can really run, wherever you trigger the thing, you will give you profit. Unless you hit at the top, you go and snipe at the top. Right? But otherwise, generally, when these guys start to come here already, here should form a range first, okay? Or even a very strong rejection back to this area here. Okay, so entry point I cannot give you, I only can draw for you like this, okay? But I think I shared quite clearly what you need to look out for. Okay, sorry, I talk very long already. I give Xiao the time. Xiong haven't been talking. Okay, I give it time to Xiong first. Okay, any question continue to ask. Okay, TA related lah. Okay, counter I probably take 1 or 2 more, but TA questions like how to draw all these you can just ask. Okay, thank you.
Yeah, thanks, Ying Jie. I was trying to hold the excitement. So yeah, I thought I shouldn't cut into Ying Jie's passion towards he's showing his passion to you guys lah. So I thought it was pretty interesting.